ado, please welcome our session moderator, Carey Bond. Carey, the floor is yours.
Outstanding. Thank you, Enya. Good morning, everyone, and welcome to Tuesdays with Lloyd's. I'm Carey Bond, the U.S. Head of Claims. In my role as Head of Claims, my primary focus is to drive claims performance in the Americas. My contact information will be provided, and should you have any claims issues that should arise that you may feel I may assist you with, don't hesitate to contact me. I'm pleased to be joined by three great panelists that will provide a diversity of pertinent information to the Lloyd's market. I will introduce them individually and ask that they give you a summary of their backgrounds, and then we'll proceed into our discussion. With that, I would like to introduce Beth Diamond, who will be followed by Mike Lent, and then Forbes McKenzie. Beth, take it away.
Thank you, Carey. So let me start by quickly introducing myself. I know my bio has gone in the chat, so I won't linger there too long, but I am the Group Head of Claims for Beazley. I have been at Beazley for over 15 and a half years now in our claims function, and our claim is a global specialist function. So great to be here. Thank you to Carey and to Lloyd's for inviting me.
Mike?
Good afternoon, everybody. Thank you, Carey and Enya. I'm delighted to be here serving with my co-panelists, Beth and Forbes. So I joined Sedgwick as head of delegated authority 3.5 years ago, after having spent the prior 30 years working with US-based insurance companies. Most of that 30 years was spent in management, with the most recent being chief claim officer for a large carrier in the Northeast. Thoroughly enjoyed my transition from carrier to TPA, and spend my days working with my colleagues to bring insurance company discipline, services, and claims best practices to the TPA realm.
All right, Forbes?
It's lovely to be here as well. Speaking to you from the United Kingdom. My name is Forbes McKenzie. I'm the Managing Director of McKenzie Intelligence. Since 2017, my company have been delivering timely intelligence to do with natural catastrophes, covering all things hurricanes, Dorian, Michael, forest fires, winter storms in Texas. And our job really is to kind of make sense of what is going on the ground. So the good folks who need the help can get it. And then we're really well plugged into the full Lloyd's Market Association. And it's an absolute pleasure to be here. Thank you, Carey.
You bet. Well, folks, we're going to get started in the discussion phase. And the way we're going to work is I'll present questions to the panelists, and then all parties will discuss those items. And the first question will go to Beth Diamond. And the question is shaped up in this fashion. Cyber-related issues have been in the news lately, with the media reporting on increased frequency and severity of events. But from a claims perspective, what strikes you as key learnings or concerns for the insurance industry?
Great, thank you, Carey. It's a great question, and certainly cyber is a really big topic. It's a really broad topic. And if we look back, thinking about 18 months ago, one of the bigger issues impacting companies in the cyberspace were Office 365 breaches. And those were really time-consuming and expensive things to respond to, because they required a lot of forensic work to determine the infiltration, what data may have been accessed, and then as well to determine of that data that may have been accessed, how much, if any of it, was actually protected based on the laws that were relevant to the particular event. So as a claims team, one would see the need to really work with the insureds, support them in terms of the investigation that they were doing, and being there to communicate in a really clear and responsive way as to coverage, right? Because before any company starts to undertake a 6 or 7 figure forensic investigation, they want to know the policy is going to be responding and that they've complied with whatever steps they needed to comply with. So, you've always seen a need in the cyberspace from a claims perspective to really take on what is a crisis management situation fast, clear, and quick answers, right? So you've got to jump in there, you've got to support the insureds, and you have to be able to communicate quickly and with confidence on coverage, because that is so important to them. And you've seen things in cyber really evolve. So, over the last year, there's been tremendous amount of coverage in the media about cyber extortion. And cyber extortion comes in different ways, but just generally, you would traditionally have seen a company suffer a cyber extortion attack where their servers or computers were encrypted, and then they were being extorted for a decryption key. What we see more commonly now is that the attack vectors are such that the bad actor infiltrates the network, exfiltrates a certain amount of data, and then encrypts the networks, the systems, the computers. And so the extortion then is not only to get the decryption key, it's also to get a promise from a threat actor that has infiltrated your company that they're not going to publish the sensitive information that they have exfiltrated from your system. So that is generally just high level what a cyber extortion attack looks like for the company that has suffered it. And what's interesting to me is from a claims perspective, you obviously are working very closely with your insured, supporting them. Do they have viable backups? Can they restore their systems from backups? What information appears to have been exfiltrated? Can a forensic help determine that? How sensitive is that information? That helps a company make a decision about how a company wants to proceed in managing through a cyber extortion event. I also think the industry is really good about encouraging companies to work with law enforcement, to report these events to the relevant government agencies so that the government agencies can get better information. Now, if you look back 6 months ago, there wasn't a lot of support in helping with these events, unfortunately. That is changing now. We've seen that after the Colonial Pipeline attack. The governments are much more keyed into supporting companies and helping them through these attacks. So that is something that is changing, frankly, on a week-to-week basis in terms of law enforcement support for companies here. But claims is an important area of helping them get into the best position possible, making the informed decisions that they will make, working with law enforcement in their particular area. And then, ultimately the company decides what it wants to do. And what's an interesting part of this for me is that cyber extortion coverage itself is largely indemnity coverage, meaning the companies make these decisions, the companies make these payments, and then they seek indemnification from their insurer. And that is something, insurers are not making these payments. They're not encouraging these payments, nor are they facilitating the actual payment themselves. But yet the media has reported largely on the industry, the entire insurance industry, and this question of, has insurance fueled the frequency and severity of cyber extortion attacks? And that has been a question that's out there. I think it's actually a really complicated question. And for me, what I don't see enough of in these discussions, but I know is out there, is insurance and the industry has really supported in upping the security game. So, companies to buy cyber extortion, any cyber coverage, including cyber extortion, have to put in applications. They have to detail the security measures that they have in place to protect their systems from these very kinds of attacks. That has upped the security game because companies know that they will not be able to place insurance if they cannot answer the questions on the application in a sufficient way, that they have invested in security. And I think that as things have increased with frequency and severity, you have seen that really enhanced even more so. Companies today that are looking to buy cyber extortion or any cyber coverage know they have to invest in their security and their cybersecurity as an entity in order to qualify for that coverage at the right price and at the right attachment point. I think the industry has also done a tremendous amount over the years on risk management. And that's something where claims trends and claims information has really helped, really enlarge that risk management circle. So it's best practices. it's training for employees. And that's something, again, coming out of the Office 365 breaches, right? We don't click on the link. I think many of us are probably at companies where we've gone through training ourselves on knowing about phishing emails and how to avoid being duped by them, so we don't click on the link and make our organization vulnerable to an attack. And now where there's even more with scanning. So I think when you see what's out there, this is a constantly evolving environment. I think the industry has done a tremendous amount to support companies in their investment in security, in harnessing best practices, in training, and trying to avoid these events. And I think the claims learnings ultimately bring us back to the place that avoiding these events are the best way we can do that. And I think the industry has really supported companies in doing that. They've really come up with good solutions to support companies in avoiding being vulnerable to these events. And when it does happen, the insurance is there and the claims team is there to support them in managing through these crisis situations.
Wow, that is fantastic. And it sounds like the claims underwriting combination, it can provide the ultimate service to the policyholder. Mike, Forbes, you got any thoughts?
Come off mute. It's all about data and the sharing of data between claims and underwriting, and from the cover holders and the policy holders as well. The flow of data is critical in all aspects of claims.
Mm-hmm.
Of course, we're interested. Yeah, and of course, we're interested in the kind of geospatial aspect. You know, where, when, how, who, by how many, and we can plot that in time and space, and really kind of bring together the kind of whole network. And as Beth mentioned, and will well know, kind of this cyber world, something happens on the other side of the world. I'm speaking to you now from the United Kingdom, and of course the impact is on the other side of the world. So the kind of time and space and things happening in real time and how that is mapped.
Wow, I tell you, that's great feedback. But I'm going to change gears here for a second. And Mike, this question is for you. And I guess what we're looking at here is, with reports of an extremely active hurricane season in front of us, what are insurers doing to try and better understand catastrophe risk and better protect customers and help them recover? What are your thoughts around that?
Great question, Carey. Ever since first quarter 2020, it feels like we've been in a continual cat mode, starting with the business interruption claims from COVID, the California wildfires, of course, the hurricanes of last fall, 2020, and then capped it off with Winter Storm Uri. And of course, the industry dodged a bit of a bullet with the earliest E-storm ever just a few weeks ago, Hurricane Elsa. So now the 21 season kicks off. It's anticipated to be extremely active, much like last year. Is this a new normal, or is this just abnormal? And so in either case, here are some of my thoughts on the short-term effects of the pandemic and the expected impact on cat events in the US. So I think we're all pretty well versed in what's going on with massive fluctuations in labor and material costs in the US. Fuel, transportation, rents, lodging, all have gone up, including goods and real estate. So inflation is hitting pretty much all aspects of the economy. From a claims perspective, I think we can expect reasonably impact on repair costs for building damage and contents, longer periods of restoration for business interruption claims. One thing that gets overlooked at times is the reporting of building values and underreporting. I would advise carriers, insurers to stay current on building valuations. This way we can avoid possible co-insurance quagmires during the claim handling process. And then another thing is, when you speak of labor shortages, that applies across the board, and it also includes claims adjusters in the US. There's fierce competition right now, war for talent for claim adjusting colleagues. So a few thoughts on what insurers are doing or should be doing to meet policyholder needs in anticipation of cat events. I think it all comes down to communication in advance of a CAT. Make sure that the insurers are in sync with the TPAs on expectations, service level agreements, pricing, reporting, and so forth. One of the most critical elements is sharing in advance risk level data. And that can be as simple as sending over a zip code for the impact area for the policies in force, or it could be as sophisticated as some modeling sent in advance of the event. This would enable the carrier to staff up and properly stage the theater of the CAT impact so that they have proper resources in place in advance of the storm. Understanding the first notice of loss process from retail broker to wholesaler to MGA to carrier to the TPA, and making sure that we understand how that process works and avoiding any bottlenecks in the first notice of loss, because that would ultimately impact the ability to triage and allocate the right claim resources to the claims that are reported. I mentioned updating building valuations. Authority, CAT authority is really important for TPAs, making sure they have adequate authority to pay advances to policyholders early and often. I don't think there's any better tool than putting money in the policyholders' hands quickly to help us avoid the engagement of public adjusters and attorneys later on. With that, expedite funding. Nothing worse than having a claim that is awaiting funding, puts the claim personnel in a very difficult position in the rare cases when that occurs. And I think most of all, and really important aspect, is partly stemming from the experiences from the pandemic, is embracing the desk adjusting model, the agile model, if you will. We've gotten pretty good as an industry at operating remotely during lockdowns, leveraging technology that benefits both insurers and the policyholders. I think of technology in two buckets. You got your active and you have your passive technologies that are now being used much more effectively than they were, in my opinion, pre-pandemic. A couple active examples would be smartphone apps, claim portals from the policyholder perspective. And then on the passive side, I would strongly consider usage of satellite imagery and drone imagery. And that's a great segue over to, I know what our friend Forbes is involved with as well.
Wow, you said a mouthful there, Mike, and I tell you what, as we sit here with the activity that's happened since Winter Storm Uri came through, and you're right about Elsa. So I tell you what, let me put this question to Forbes. Forbes, satellite imaging services have been a great innovation for the industry's claims process, helping with decision-making and other factors. What innovations are you seeing that are not being discussed? And could you expand a little bit more on what Mike referenced in his response?
Yeah, I think one of the things that we find most exciting, and I'll talk a little bit about the technology in a second. Mike talks about the first notification of loss now. It is now possible, and we've been doing it for the last couple of years, hand in hand with Lloyd's in the Future Lloyd's program. The Future Lloyd's program tasked us to come up with a solution whereby we could do the first notification of loss. Our good friends Mike and Sedgwick took that technology, and we started to use it in the California wildfires 2019, 2020, and we're now able to identify the first notification of loss before often the insured have. I know, and as Mike says, that gives the ability to get payments to folks that deserve it and have fairly paid for it in their contracts. It's about retention, it's about customer experience, and it's about the Lloyd's promise to pay claims, and it's getting that done. And technology enables us to do that at scale.
Well, I tell you what, the response, the resourcing issue. Mike had referenced the challenge for talent. And if you're able to retain that talent and being able to allocate it on the ground by the use of the technology that you just described, I think that portends to a great outcome for all parties involved. Well, let me change gears just one more time, and I'm going to go back to Beth. Let's see. Beth, COVID-19 will reportedly cost the industry a little over $200 billion, presenting some challenges to the claim space and our customers. In your opinion, where do you see the biggest challenges coming from as the industry recovers post-pandemic?
Carey, that's a great question. And COVID-19 and the claims arising out of it have been really a big challenge for the industry. We've seen a large number of claims that are covered that I think the industry has done a great job paying in a timely way. And I think that is a good story, but it is often overshadowed by a lot of the media coverage about small business challenges with business interruption. And I'm sure most who are tuning in today know about the FCA test case. And that is something that, had a tremendous amount of attention to it, both, of course, in the United Kingdom and outside of it. And I think the challenges to understanding the start and stop of business interruption for these small businesses really created a bit of a black eye for the industry. So regardless of where you sit in the industry and how you may have managed your claims, I think the industry is carrying some really negative, views as a result of that. I think small businesses, particularly in the UK with the test case, have really lost confidence in the industry. They've lost trust. And I think one of the biggest challenges for the industry is how we get through that varied experience and the confusion that it all created. How do we reestablish trust, rebuild confidence in the industry and the coverages and in the claims handling of it? And so I think, that's something that's really, a challenge for and incumbent on everyone in the industry, regardless of where they fell on the spectrum, to support the rebuilding of trust, the rebuilding of confidence, the clarity of communication to ensure that particularly small businesses understand where that coverage starts and where it stops, so they know what they have when they need it. I also think it's a great opportunity, though, I would say, to really not just build back on trust and confidence, but to innovate. I think the industry has learned a tremendous amount as a result of COVID of new coverages that could potentially be out there, new ways to ensure things that people hadn't really thought of before, because they hadn't really thought of a global pandemic to this extent for over a century. And I think there's some great energy in the marketplace today to really think about how do we innovate, how do we create and come up with new products that support businesses, small businesses, businesses of all sizes, to manage through the various challenges of potential future pandemic and other sort of, unexpected events that may occur. So I think you see the best of the industry when it's challenged to come up with new ideas, new products, and I'm excited for the innovation I think we're going to see in the next 18 to 24 months.
Absolutely. And when we think back, for instance, in the hurricane season last fall, one of the concerns may have been, well, how do we adjust claims in the COVID environment? And you know what? The resiliency of the industry proved out. And we were able to adjudicate claims, meet the policyholder where they live, and adjust those claims, and let alone the technological innovations that came about. And with that in mind, Mike, I'm going to ask this question of you. From a technology standpoint, what innovations do you see having the largest impact on the field environment, and how do those innovations translate to a benefit for the customer? Could you expand on that a little bit?
Yeah, I'd be glad to. Great question, Carey. So technological innovations are definitely having an impact on, particularly in the field adjusting environment, several of which have been accelerated due to the pandemic. As previously mentioned, modeling and risk level data allows for prompt, accurate staging in getting the right resources to the right places quicker. talked about post-cat satellite imagery is now available to assess the widespread impact in the area of the impact. Drones for assessing localized damages are now being obviously much more in play. I think client portals are starting to come of age a bit, where insureds can now self-report and track their own claims, interact with the insurer or the cover holder. I think use of AI in first notice of loss is starting to show up in certain areas, enabling carriers to identify which ones actually require a field adjuster versus those that can be desk adjusted using the Agile model. And again, there's a myriad of tools that are now available to field adjusters. I'm seeing, in my world, I'm seeing the use of field adjusters using mobile field apps where they can go out in person with their smartphone, scope a loss, take photos, push a button, and have it transmitted directly to the carrier. So that's definitely come of age. Most adjusters, or many adjusters now, are equipped with measuring tools like Planner and Hover. Some of them even have moisture content detectors. These are all things that are not only benefiting the insurers in getting to the number quicker, because that's really the question after an event: how much? And you can never answer that question soon enough. And then from the policyholder perspective, quicker estimates, quicker payments, reduced cycle times, reduced loss adjustment expense, and overall better customer satisfaction with the process.
Wow, that's pretty in depth. Forbes, I tell you what, I think you have a unique perspective here. What do you see on the horizon from a data gathering and dissemination standpoint as the industry moves forward?
Carey, there's so much going on at the minute. Mike's already touched upon all the various really valuable sources of information. We talked about drones, we talked about satellite, we talked about aerial from an airplane, we talked about the human on the ground. We call them the trained human intelligence collector, where you've got an adjuster on the ground with a moisture content reader. And all that information is valuable and is being collected in real time around about an event that matters to us. An event that matters to our customers, an event that matters to the insured, and it's about getting the response to those folk. Now, where we see the big step forward and where all the technology is taking us and is being enabled right now is bringing all of that information together, processing it, turning it into intelligence so it's actionable. And the actionable outputs are first notification of loss. The actionable outputs are understanding the event in a granularity. The actual outputs are helping the exposure folks out with understanding what is in, what is out, whereabouts they come on the layer, what the deductible input is, and how that impacts. And for the claims folk, the role of the adjuster is not going to be replaced. The role of the adjuster can now be supercharged, and we can really enable the adjuster to do a great job by triaging the response, getting them to the locations that need it first. We found with Hurricane Laura last year, it was the kind of what I call the quiet folks, those folks that maybe haven't got a platform to shout up and down. They needed the help first. And these technologies enable us to direct at scale the help that needs to get to them so they can get back up on their feet. And I think that is the big step forward that is taking place now and is only going to increase in scope and speed and scale over the next few years. It's an exciting time.
Wow. Well, you talk about intelligence for insurers. Is this different from intelligence in general? Can you kind of expand on that a little bit? Because you talked about a lot of data gathering, and it may get the perception that you're a data company. So if you could talk about the difference between insurer intelligence and intelligence in general, and are you acting as a data company? Can you expand on that a little bit there for us?
Yeah, so as an intelligence company, which is what we are, but set in with a technology setting, we take data in from data companies, and that gets processed. Now, intelligence for insurance is adding value to the insurance chain. And take business interruption, for example. If we know we have a restaurant from a restaurant chain that's been impacted by a hurricane event, and we know that there is flooding 1 mile away that's blocked the road, therefore we can then take the ingress and egress, there's an exclusion zone, and that restaurant has a business interruption claim, so therefore it can be paid. And intelligence in the insurance setting is about working with what the contract says. It's about getting the cash to those that need it. It's about responding in a way that should be done, but also it's about putting value back into the insurance cycle, which makes better pre-underwriting decisions to be made in the future time. And Mike talked about understanding the kind of building that's being insured. That is all held in a database, which improves the response and the various service lines.
And Carey, I just expand on that too. So I think Forbes and Mike have really, added a tremendous amount in terms of the first party claims you see, particularly coming out of natural catastrophes. But even if you think about liability lines, right, we know from data from external sources, what are jury verdicts looking like in certain jurisdictions for certain types of cases? What are settlements generally going for, again, in those same jurisdictions for those types of cases? There is a lot of data, and I think the power for the industry is harnessing its claims data along with external data to support that and really help inform both the insurance companies and the claims handlers, as well as the insureds. And that's something you'll see happen quite commonly in the liability spaces. You'll talk about, let's say there's an EPL claim. What is the value of that type of claim in this type of jurisdiction? What is the likelihood of a summary judgment versus going to a trial? And that helps inform an insured about, okay, how do I want to approach settlement? What is my strategy to resolve something within a certain financial range based on this additional information that's been provided? And I think that's really where the power comes in. When you harness your claims data and expertise and you add to that these external data functions in whichever area it may be, it really produces a very powerful ability to analyze, strategize, and ultimately come to a final outcome.
Absolutely. Absolutely. And I tell you, when we look at all of our combined experience, and then we add on top of that the technological advances, the data gathering, and the consolidation, and then being able to access that data to make decisions, it is absolutely astronomical, the possibilities that become available to us. Let me ask you a question just for general consumption. The Suez Canal claims, thoughts on such a sophisticated and highly technical claim. What are your thoughts on that claim? The ship was stuck and quarantined and things of that nature. What are your thoughts from a claims professional standpoint?
I have a couple of thoughts on this, only from what we looked at. We were actually more interested in the build-up of ships around about Rotterdam port. The downstream impact of what's happening in the Suez meant that Rotterdam port was heavily impacted for 14 working days. And the business interruption claims and the logistics of supply issues round about that was really quite something else.
Yeah. Well, I think some of the things that come into mind is the exposure, the coverage that applies, and is the right expertise being applied to it. And it brings up something that Mike had mentioned earlier, and it gets to talent. We've heard about the talent gap in the insurance industry in all job categories. What are we doing to help fill that gap, especially with regard to processing claims?
Hey, Carey, I'll take that.
Okay.
It's a very real concern, and it has been, and I think it's just been accelerated due to current events. we're all aware of the aging workforce. You look around my office and you see folks my age or older, if you can imagine that are, been in claims for 30, 35, 40 years, that are ready to retire. So really the industry has talked about bringing in trainees, training them from the ground up. But, there's other opportunities out there. And now, as a result of the pandemic, we've discovered geographic flexibility, and anyone can work anywhere, anytime. And we've used that model successfully, somewhat surprising how well it actually worked. So now you have geographic flexibility, you have an aging workforce, and you have continual cats, at least perceived continual cats, that are keeping at least first-party property adjusters very busy. And they have options. Cat adjusters, stormtroopers, they have plenty of options to earn a fair paycheck and then some. So really, the best thing the industry can do is continue on the path of bringing in trainees. Yes, it takes a long time to master the craft. Yes, it's a huge investment. But if you don't invest, you're going to end up having to go out to recruiting, staffing agencies, and that there's a cost involved in that as well. I think the other piece of it is maintaining an attractive workforce with above average compensation, with flexible hours and attractive benefits. These are all things. There's no one silver bullet to solve the talent issue. And I think that the carriers that are ahead of this are the ones that are going to succeed in the end.
Great response. Well, it kind of reflects one of the questions I'm going to take from the question and answer. It's a question from San Antonio. I'm going to read the question, and I ask that if you have a thought on it, offer that thought. The question is, and I'm going to read it verbatim. I have found that dedicated claim teams for large commercial accounts has added tremendous value from a relationship and knowledge perspective. Is this something that carriers and TPAs are equipped to do on a larger scale, or is this increasingly more difficult due to turnover in the industry?
Carey, do you want me to take that one first and then pass it to Mike? So I would say that I agree. Particularly in the large risk space, it is really valuable to make the most of those relationships. And that's what makes insurance sticky, right? Are those relationships. We have found really getting to know the claims team early when you first are placing business adds a tremendous amount of value as well. It's great to establish those relationships before the claims come in, because you've built a connection, you've built a rapport, and then when the claims come in, everybody knows who they're dealing with. And we find that to be really productive. And I think that, there has been over the years, a lot of value that has come from investment in relationship and the continuity of relationship. I think, Mike really outlined quite well some of the turnover and the issues that we're facing as an industry right now. And that's where it's really incumbent on expanding that relationship. So if I am the person who has had a relationship with company ABC for the last 15 years, I need to be bringing in, some new junior talent who's going to own that relationship with me, right? And the way to start that is to really transition those relationships naturally and over a period of time, where that very important client, that very important insured company ABC gets to know not just me, Beth, but they get to know Sue, who works with me, who's, starting out in her career. And I think adding to what Mike said about how we bring talent into the industry, it's empowering people. It's giving them the opportunity to act so that they have authority to do things, and that they're getting exposure to clients, and they're, they have that opportunity to be part of decision making. So I think also introducing some of our younger, newer talent into the industry to these key relationships also helps engage them and in the industry and in the longevity, hopefully, of their career within the industry.
Outstanding. I couldn't agree more. And
thank you, Beth. Yeah, I'd love to go take that on a little bit too. I mean, it's a great question. And one that we talk about internally here quite frequently, the old concept of a designated adjuster versus a dedicated adjuster. There is a big difference. And when you have that dedicated team that serves no one but that client and its policyholders, you form a partnership that basically lends to a complete integration of the TPA and the carrier and the cover holder that really is unmatched. So to get to that place of dedicated teams and adjusters in the claim world, from where I work is you need to reach a critical mass of volume. Obviously, there's a cost. And once we reach that, we've employed the dedicated adjuster, the dedicated team very, very successfully. And we have some very long-standing relationships and partnerships with clients, and it allows that team to grow with the client as well. So it's a concept that is extremely successful. And as soon as a client reaches that critical mass, as I mentioned, it's one that that all TPAs and carriers should employ.
Great point. Great point. I'm going to take another question out of the Q&A, and I'll ask your feedback on this one as well. This question is what are your insights on a valid claim situation where a supply chain company may have become insolvent? I'm not sure I understand that question, but in light of something that you had mentioned earlier, Mike, about the current situation here in the United States where building materials, fuel, logistics, all those things are combining to create issues in the supply chain. Now, the insolvency of a company within that supply chain, I'm not sure what impact that would be because I'm not sure which company would have the most impact. What are your thoughts on that, panel?
It's certainly not good. Certainly it could gum up the whole process, but I mean, being agile and flexible enough to find a replacement for whoever becomes insolvent would be critical. Having, a deep list, A, B, C list to go to when that might occur.
Yeah, and I think the point that you raised earlier that since we know these things exist and the agile model says that we can prepare for it, I think especially at this time of year, the supply chain is absolutely critical. And with new homes being built, renovations being done, and we're about to start the hurricane season, it's definitely a consideration. And I think we're showing that is something that's at the front of our mind. One other question.
Oh,
I'm sorry, go ahead.
Sorry, just before you move on from the supply chain, I wanted to add, it's really interesting because of COVID-19. I think there is a greater focus by companies as to their supply chain vulnerabilities. So I think we've talked a lot about their unavailability, whether it be from bankruptcy, whether it be from them being unable to get out of the Suez Canal, whether it be that they just aren't able to transport their goods. And I think in addition to that, I would add the cyber risk that comes from the supply chain as well. And we saw that from about a week and a half ago. There was a very well publicized breach event, a cyber extortion of an organization. And then as a result of their place in the supply chain, how that has potentially impacted thousands of other companies. And I think that's something as well that as any company is thinking about its vulnerability to the supply chain, they need to think about their vulnerability to the cyber impact of that supply chain as well. And again, I think that is an area where the industry can really support companies in how they can best risk mitigate those supply chain situations. And I think that, again, that's a strength that the industry brings.
I agree 100%. I'm going to bring one more question from the question and answer, and it is, given all potential fraud that is about these days, particularly as a result of COVID, how is that affecting the Lloyd's claims process and cost of claims handling?
What don't I,
I'm sorry, go ahead, Beth.
I'm sorry, Carey, did you want to finish the question?
That was the question.
Great. Well, why don't I start, and then I don't know if Mike and Forbes have anything they want to add to it. I think that what's been interesting coming out of COVID is how much we've been able to move quickly to utilize technology and all these external data forces. And I think as a result of that, that's actually helped the industry avoid fraudulent situations. So, in the specialist space that I sit in, we, obviously are quite alert to fraud, but it's quite infrequent for us. And I think in terms of the information we've been getting through the various technology channels with COVID, I think we've had a good opportunity to have proper sight and double checking of information. And I'm sure that's similar on the personal line side. I don't know, Mike, if you had anything, or Forbes, that you wanted to add to that, but I do think actually all of the enhancements with technology have actually really helped mitigate and lessen the fraud risk.
Yeah, that's a great point, Beth, and I agree 100%. Looking back over the last year and a half, fraud investigations, I would say, have remained stable despite a rising environment of new activity and new losses. So therefore, I must conclude that fraud is not being detected at the pace that we would have expected. Now, when it is, you have to invest in making the proper moves from a claim perspective, resulting in claim withdrawals, ultimately leading to a conviction if the carrier decides to pursue it that far. But I think right now the industry is catching its breath a bit in terms of fraud awareness and detection. It's still going on, but I think there's still a fair amount of work to do to bring that back to the forefront, because we know it's out there, and we have the tools. When properly detected and the tools are engaged, the savings are tremendous. Because so yes, it does add to the cost of investigating a loss, but I would say that the benefits far outweigh that investment of cost.
Outstanding. Well, with that said, we'll bring the panelist portion to a close, and I'll invite Enya back, and I'll thank the audience again for having us. I'll thank the panelists for participating, and with that, Enya, back to you.
Thank you so much, Beth, Carey, Forbes, and Mike, for your insight, which is super helpful. And thank you, everyone in the audience, for the great questions. Again, this is such an important part of our business. Is the claims, it's the core of insurance. There's no doubt about that. So hopefully you guys can stay connected with other speakers and with Carey via LinkedIn and other channels. I believe we also have their contact in the chat box. And for next Tuesday, we encourage you to join us. Tuesday in a week, which is the 20th of June, we have a special session for cover holders of Lloyd's. What's new and what's coming. We'll have the team of our authorities team in London will preview some new systems will be introduced this summer, and also provide a demo of the cover holder workbench quote bind issue system. And so we'll look forward to have you join us. And in the meantime, please stay well and stay connected. Thank you again, everyone. Thank you. Have a nice day.
Thank you very much.
Thanks, everybody. Bye-bye.
Bye, everybody. Very nice to meet you.
Have a great day.
Thank you all.